Fegi ya NCBA nilagwa na fegi ya Stanbic. When Stanbic you be acquiring NCBA, NCBA has so many shareholders. I probably think it is also listed in Nairobi Security Exchange. Shareholder only enjoys the profits. Shareholders only enjoy the company is doing well. Officially NCBA all those offices will remain operating. When banks grow big, there comes a lot of bureaucracy. NCB on a magolite National Bank at 3 years makoma kimina karia niriri. To ako National Bank yani no masira maige muno. How well do they serve the underserved? Mwega muno muroreri wa Paul Chege TV. Nini wanyu Paul Chege na ndi haha. Heka udogo na ngong kiari horo wako. Kwa horo wa fegi ya NCBA nilagwa na fegi ya Stanbic. Nego kurehere prerequisite information kana the monetary consequences. Is it consequential or inconsequential to the shareholders? Alemana either shares ya Stanbic kana share ya NCBA. Tarabu kuzabe murukoje tajiri horo siori. Muka beta kujoria mukajira atiriri. Juice the other day na atiriri fegi you must be at least 4, and the 4 of you must be at least must not own more than 25%. You can manage to go. 2 or to get na berari fegi ta ko NCBA ri yari maja ya Commercial Bank of Africa CBA na NIC Bank. So makisiki maji hamu na kitu mafegi maji 1. It is get my fegi majire. So I want you to understand get my fegi majire. 1, do co-capital, something called co-capital. For example, the model model can be fegi akere. If you want to start a bank, no bank whether you do that co-capital. Co-capital is best idea called one share fraud. Before you get a deposit, taking license out there by CBK, you go aji pesa from the public. So in most cases you get hadara for example you get hadara no kinyaga hadu kona you need capital inflow. The capital inflow in your 1, what you can do no let them a new shareholder on board can 1 no let a new shareholder on board. 2 no we kill no mukoma debit another bank with another bank in the industry, and what is the advantage of a merger of bringing a new shareholder or get a new shareholder you just bring in money. Okay, arrived in your existing market. But when you merge, for example, go to NIC na Commercial Bank of Africa mama jire. NIC man na customer share na capital ya okado. The capital that they were working here that time, when they bring together, they combine forces. So they have they have brought in money in capital, money. 2, money in customers and the market experience. They can have you understood me? So we prefer merger over bringing a new investor. Fegi nyigemo no nyita na kataru fegi gweto cooperative ni yago fegi ta Kingdom. Have you ever seen Kingdom Bank? Kingdom Bank ya jami bora. Ekigana madera magemo no making Ross in out. Makegoro fegi ta cooperative. So when you see Kingdom Bank, you see Cooperative Bank in the same image. So fegi yao. So banks have the art of merging from time to time. So this is not the first time fegi yako ike merge. Taru Kingdom mo kera maroni mana ogidio ore interested ya Kingdom is the same na interested ya fegi na wetu is the same interested ya fegi na wetu cooperative. And ogidio brand name share they almost did the name brand as the same brand. Although they na bere ogwori Ever gigetago National Bank of Kenya. Nekoleto ya akoyo ni fegi etago KCB. No, but after KCB akoyo National Bank, makora it is coming to nekokolia fight a shiao. And how did he fight that fegi weto fegi weto Riki gato mide KCB on a magolite National Bank at 3 years makoma kimina karia niriri. So our National Bank, yeah, no masira my gemono. Yes, it is making profit, but yeah, no masira my gemono got in. So if I the masira my got in makaho to so what could they do? Nikiwa ni makemera come access back to Nigeria. And they carry Nigeria that they approve. If Nigeria bank approves, it approve merger. National Bank will be trading at Access Bank. Access Bank ni bank ya Nigeria. So you understand. So twekora ihoro wa NCBA gutuika ni iragura Stanbic gutuika ni iragura NCBA. It's not something new. It's something that actually exists in the market. No gekira ndaka ongiuria ni riri NCBA is a well performing bank. Tomonofegi iguragwo when they are making losses. When they are making losses, when they are not able to make that meet. No akinya hare wakora NCBA mada kugurwo ni Stanbic. So I've not understood the reason behind it. I don't know whether it's a merger or they are buying it off. So it's a total pure buy off. Who have more branches between NCBA and Stanbic? NCBA probably have more branches. NCBA because they had more branches. Mena branch area Tattoo City. Mena branch then not the mall. Mena branch area Kamaki. So within the Kartiaro, they have over 3 branches. But let's come to Stanbic. How many branches of Stanbic do you know? How many branches of Stanbic do you know? And as far as we are saying more by back in here, how many branches of Stanbic do you know? So the concept that we need to dig on our mind is why are they buying it off? But let me now hit the right point. Is it consequential or is it inconsequential to the aspiring shareholders? Shareholders let's first start in a shareholders NCBA. Can shareholders Stanbic. One, what you need to understand, shareholders, the only place you get shareholders enjoys dividend. When they declare their profit, part of their profit was shareholders. So shareholders do not enjoy. Shareholders, they don't depend on they are trading on a new brand. Shareholder will only enjoy the profits. Do you understand me? Shareholder only enjoys the profits. Shareholders only enjoy the company is doing well. So let's now dig into the image. Because when we match NCBA, na to match na Stanbic, the cost reduced to get ready from now. Shareholder around best, but now we are able to reduce costs due to the economies of scale. One, for example, to carry the corporate tax rate 30%, so that remains the same. So no matter you match 3 to 4 banks, corporate tax remains the same. Corporate tax remains the same. VAT, value-added tax is all remain the same. So VAT is 100% in consequential. Do you understand? VAT is 100% in a consequential. So even as we move on, which other cost remain constant? One, another cost is cost yako higura maofisi. I don't think at my konyitana NCBA mahige maofisi mao asa. Official NCBA all those offices will remain operating. And then I don't think acquire the brand. Matiko acquire the traded at that Stanbic. They trade at the NCBA, no ownership, no go ownership no go ya Stanbic. To that with a Kingdom Bank, one cooperative, but they trade at the Stanbic, but they are owned by corporate. Kingdom are owned by cooperative bank, by the trader Stanbic. So some of these costs will actually remain constant. So now the benefit would be more access to funds. Maybe even the issues to do with loan default. Even if the issues to do with loan default. The way customer mana default kwa NCBA kana mana default kwa kwa Stanbic, customer is continue defaulting. Are you getting me? The only advantage that will come on the board is maybe the managerial cost, maybe the HR. Maybe the managerial cost is where you can save. maybe the managerial cost. For example, what am I saying? Our management in the same way. The HR cost might be the same. Not the career. Or when they are ordering goods, they will be enjoying the economies of large scale. They'll be enjoying the economies of large scale. So they'll be able to order the same at a cheaper or at a lower price, lower than they could have ordered before, because they will be ordering in numbers. Have you understood? Sorry. So now something else I'm asking myself is when Stanbic you be acquiring NCBA, NCBA has so many shareholders. I probably think it is also listed in Nairobi Security Exchange. Not stock. It was called Stock Nairobi Security Exchange. So we'll stand the acquire NCBA in totality. I think we have to refer the shareholders. Mena shares kwa NCBA. Na umetekele marifado beza shiao. Kana madamire Stanbic makoro me shareholder mwena ule, because if you want to acquire the whole thing, if you want to acquire, no get okay shareholders here about the NCBA share. If you want to acquire it in totality. No my how to acquire NCBA. You know the reason being Stanbic is not owned by a single individual. Now Stanbic is owned by Standard Chartered, like Standard Group of Africa. It's also owned by another bigger group. On Stanchart Bank, I think it is a member of Stanchart. It's also a member of Standard. I think that the same group that has bought at Stanchart. It's also okay. They traded at the name. They have some correlation with Standard Chartered Bank. So I want you to do that thing. So the reason I was doing this show, do I call it here today? Even if we are getting this transfer, is it consequential or consequential to shareholders? That matter really. Most of the cost will remain constant. So, whatever I dividend there before, no money I dividend you all more. I've spoken about shareholders. The shareholders, we only get money. The budget will only make, not imagine the acquisition, we don't make a sense to them. If there's a cost, if there is a cost you're saving, and that cost will, when the cost shashoka another profit tika the naigoro. So either way, profit is cost minus expenses. Revenue minus expenses. So, what about the customers? What about the customers in NCBA and the customers in Akiria? One, mona veki sa jikonyita no gwori. We create a monopolistic environment. And what do we say when we say a monopolistic environment? And customers, they are going to suffer. Initially, there is a market that NCBA was serving very violently. But when they merge, I believe there'll be an increase in the bureaucracy. And when do I say bureaucracy? Sometimes policies bank have their own policy, which are ironclad. Kana policy affect okomodo CRB da akobithio beza da gikobithio as far as you cost CRB. And how does this affect them? How does this affect the customers? Gakokora trade. Mathina ma customer maravali from one customer to the other. No manyita. So when banks grow big, there comes a lot of bureaucracy. There are those people with the millions and millions and millions. So customer wako kuthi wajiko wa kawaida ni gutigotiga gonathi. Wajiko wa kawaida ni gutigotiga gogisafa. So wajiko ni gosafa asafaga. So wajiko will always suffer when big banks merge. Ni mathikiriria. So wajiko will always suffer. Two, Fergie nyitana ri they can create a monopolistic environment in terms of makai interest rate cia maroni if they are not regulated by Central Bank of Kenya. Interest rate cia feg. So if they decide we have like ugama jigo nyitana. So if NCBA and Stanbic are kana Stanbic ne kunjina nyitana kana either acquisition whichever comes first rate. The competition of Fegi Gisiera, and there's something I told you the other day. Fegi Nigamo said Jitana. The Jitana, what will happen? They will don't want to Fegi mono, of which they will command the market. So the Moraka behind the scenes, come out of my Gemono Motocom, Mokyo, Modomagmeta overnight trading, and Modomagamaye. So, Casamani Mokomo suffer. And if you don't, if you don't boost the microfinance sector, I got to go to boost microfinance sector kind of department. We all Mokenya Kaida go suffer, and I think the government should come on board. How well do they serve the underserved? Do you understand me? How best or how well do they serve the underserved? How well or how best do they serve the underserved? Toru Mokenya wa kawaida na kwa githindika muno uria mama mboga bekuria kianda kuona facility uri ni murito muno tondu ru fegi gutigirwo itonga either you have wina ngari ka wina mugunda cio ni gutigirwo mafegi manene fegi dikunyita na oguo tondu desperation ya customer ni guthira desperation ni guthira to captain ni ongerereka ri mathe kona thina wa liquidity because they are combining forces they are gonna issues the liquidity, so desperation will be a thing of the past. Not the case. So, Mokenya kind of work suffer. And what I wish what I would wish for this government. The comment your money can go 10 billion as part of the core capital. Makoro market is so high. And we said most of the bank out of the market. Do you understand me? Thank you, Mono.